have a company joining us now, Neogen Chemicals. The Q4 was a mixed quarter for them. Margins expanded and profits increased, but revenue saw a slight dip. Harin Kanani, the managing director at Neogen Chemicals, joins us now to discuss their quarterly performance and their outlook. Harin, thanks a lot for joining in. Appreciate your time here. Thanks. I want to understand how is the demand situation on the ground, especially from agrochemicals, from the pharma segment. What are you seeing in FY25 and what could the growth rates look like?
Hi, thank you. Good morning, everyone. So I think, as we had seen some challenges last year for like many chemical industries, and what we had seen, pharma and agro was slightly slowing down. But what we've seen now, pharma recover significantly. We've also seen that in case of pharma, except for bulk pharma, most of the segments have recovered. And some of the APIs, the demand is also now significantly increasing. So I think that's a good sign. In agro, still the news from most of the international customers is that their 24 demand is taken care of. They want to basically focus on 25, and they will come back in the second half of 2024 calendar year to basically start discussing their demands for 25. So that remains the situation in agro, which is what is affecting us. Our exports also were a bit lower because a lot of our exports are linked to the agro industry. However, the revenue decline that you see is mainly because of lithium prices, which were astronomically high, have now are at astronomically low levels. So that's a big difference in that 1 year which has happened. But in terms of volume, there's always a growth. Also, our acquisition of BuLi Chemicals for organolithium chemistry, so that's coming on well. We saw a good turnaround there in terms of revenue contribution. So that's something which is helping us. And in the current year, we are expecting revenues to continue to build up for our BuLi Chem acquisition, as well as, the battery material segment will also start contributing, especially in the second half of the current year.
Sure. So you're sitting on a base of around 700 crores of revenues as of FY24. Yes. Where do you think you can end FY25 and 26 with? Any ballpark estimates?
Yeah, so for our base business, like the non-battery business, what we've estimated by FY26, we should be somewhere around 1,000 crore because that's the capacity which is already there. As the market recovers, we should be there. And I think FY25, we expect somewhere closer to, depends on how much the recovery is, we expect somewhere closer to 750 to 800 crore. That is just the non-battery base business. On top of that, our initial trial capacities for the battery materials have started coming online. We've started getting some approvals. We started shipping some trial quantities for approvals to the customers, which should come in Q2, Q3. So even that business would contribute at least 100 crore plus kind of a volume. So together, maybe somewhere between 850 to 900 crore if the battery approvals come on time and the BuLi chemical approvals also continue. So that's something that we are looking at for the current year. And FY26, it's definitely going to be 1,000 crores on our base business. The battery would be 250 crore plus, but it's a little bit too early for us to basically give you a revenue guidance on that. But it'll be at least that. And then depending on how the Indian battery production ramps up, we can go further ahead from that.
Okay. All right. Hi, Mr. Kanani. Good morning and good to see you. And just to clear the air, battery chemicals for FY25 should contribute 100 crores. And by FY26, it should be around 250 crores. We got that correct?
Yes, it's 250 crores is the capacity which we already have in place. So we feel that will be fully utilized. Plus additional capacity is coming. Yeah. So we have a capacity today which can do around 250 crores. So that will be fully utilized in FY26. But our electrolyte salt capacity, we are going from 400 to 2,500 metric ton by end of this year. And our we are also building the large plant with Mitsubishi's technology, which is coming online second half of FY26. So how they come online and how the demand for that comes online will basically have a performance beyond that 1,000 plus 250. So beyond the 1,250 crores revenue, which we are projecting.
All right. And your volume growth in the organic segment was around 25 to around 30%. What are you projecting out there for the coming year, FY25?
So again, the 700 to 800 crores, which we have projected for the base business is completely out of volume growth. So we are seeing additional at least 10 to 15% volume growth in our base business, which is mostly the organic, because the inorganic segment is already at almost full utilization. So mostly that will be coming from around 20% growth in organic business over the current year.
All right, we'll leave it there. Thank you very much for taking out the time and speaking with us here. Appreciate it. Good luck, and it's always a pleasure. So that's Neogen Chemicals with perspective after the numbers.